Seetharaman.
Good afternoon.
Welcome to the latest episode of Doha Bank's Knowledge Management Forum. The focus today is on the Foreign Account Tax Compliance Act, referred to as FATCA.
That's right.
The FATCA is getting implemented this year to discourage tax evasion. Could you help us understand what is the FATCA?
As you rightly said, it is U.S. government has stipulated its norm to make sure that tax evasion is not there. Whether you are within U.S. or outside the U.S. residency, you are a U.S. citizen and you are supposed to comply with the overall framework of FATCA. It will minimize the workflows in chasing these customers, chasing these institutions, chasing these individuals who are supposed to comply in substance. So the government of United States have realized tax evasion was possible through onshore and offshore. And U.S. citizens around the world, when they go for employment, some are submitting the tax compliance format, some are not. So this FATCA will provide a long-term, collaborative model for various governments, intergovernmental, to make sure U.S. citizens are in full compliance.
What is the impact on the foreign financial institutions due to FATCA?
There are two types. One is institutions who are compliant, institutions who are not compliant. Institutions who are compliant have to necessarily register and they have to withhold 30% tax in terms of their supports for the supply chain. And again, they have to necessarily make sure periodic submission of the regulatory reporting comes in. Non-compliant, obviously, they have to, anytime, say, any supply chain, any dealing we do, inside or outside, they will be having withholding tax. So it is better to format in such a way that government collaboration comes in and registration comes in, track record and analytics are flowing through to measure and manage the overall transaction flow.
Dr. Seetha, how has the U.S. government implemented the FATCA framework?
The U.S. government has entered into collaborative models with various governments around the world. One, IGA 1 and IGA 2 are the two norms they set in. These norms are, whether it is United Kingdom or France or Italy or Spain, the FATCA provisions have been well set in, and the U.S. citizens or institutions who are dealing with, whether it is asset managers or investment bankers or brokers, they are all coming into the bracket. Institutions, individuals, both. And IGA 2 talked about FATCA or for the offshore models, whether it's Switzerland or Jersey. Those are the models where there is definite access to these informations in both the ways. U.S. government as well as the respective governments who are offshore can also have direct access to U.S. Analytics and intelligence.
So what are the recent bilateral agreements in relation to FATCA?
There are many agreements they have entered into. 18 agreements FATCA has entered into, and some of them are, very mature, advanced, analytics with governments who are integral part of the well-established systems, whether it is the United Kingdom, France, Spain, Italy, and again, Japan. When it comes to the other collaborative models, intergovernmental models, they have also entered into of late with Isle of Man and Jersey, and again the Bermuda. Those are the taxmen, Switzerland and Singapore are all recent agreements which are going to have total compliance model as pronounced by 2010 U.S. regulation.
What are the challenges for GCC countries on FATCA implementation?
Very many challenges. Number one, the compliance standards are not as rigorous as U.S. because that's in a very established systems in terms of income tax, individuals or institutional. Whereas we are evolving to be a combination. Here personal income tax is exempted. So always you need to have these U.S. citizens who are engaged in these Gulf countries, you need to track them, and again making sure the overall compliance comes in the built-in model. When it comes to the compliance format also, much of the information network is not interlinked. It's not a straight-through processing, so it is still manual, still needs to be bridged in line with the overall information network. The analytics required online real-time for U.S. authorities, governmental panels to check in is not online real time. That's a major constraint. I think it's getting fixed. In the coming days, you will find the Gulf economies are also building systems. For example, flat tax systems are available in Qatar. Again, the central bank has set in the regulatory framework for FATCA for us to comply. All the banks have been pronounced in substance what sort of the compliance model they have to build in. Individual responsibility accounting has been created in the financial systems, institutions, and that's what is now chases on. But still, it's not as mature as advanced countries. We are coming to terms in terms of overall compliance model.
Thank you for your time, Dr. Seetharaman.
Thank you.